With Miranda Kahn, J.D. Hayworth back with you on Newsmax Prime. Miranda, we saw it all last week, the good, the bad, the ugly on the stock market. As a matter of fact, at one point, the Dow was down 1,000 points in a single day.
Wow. It's just so hard to imagine that happened. But yes, several financial experts said China's ongoing stock market crash is one of the main reasons for the volatile markets. And China says it will no longer prop up its market after spending $200 billion. So what does all of this mean for the U.S. and our global markets? Well,
why don't we ask our next guest? He's the chief economist at the Heritage Foundation, and he Skypes in with us, Stephen Moore. Now, Stephen is not only a man of numbers, he's a man of letters, a columnist and co-author of the book, An Inquiry into the Nature and Causes of the Wealth of States. Stephen, looks like a lot of wealth is going out the window. The stock market down 7% for the year. Experts say it's only going to get worse. What do you think investors ought to do?
Well, look, as you just said, we had an amazing roller coaster ride, JD, over the last couple of weeks, and that roller coaster ride continues through the start of this week already. So people are very jittery. They're very nervous about where their investments stand. I would say this to people who do have investments, either retirement accounts or own individual stocks or 401k plans. Now is not the time to sell your stocks. You never want to sell low, you want to sell high. But these are nervous times, and it's significant to me, JD, that here we are in a very frightening time economically and financially for this country. And as we speak, President Obama is in Alaska talking about global warming. I mean, this is a president who's really taken his eye off the economy and jobs.
Yeah, you mentioned the president doing that, but he also gave the go-ahead for Shell to drill.
Well, I think that's right. And, look, the thing that's so frustrating about the economy and the stock market right now is that almost all of the talk out of Washington is very bearish. Look, if we could get the right set of policies, if we could get our tax rates down, if we could have a pro-energy policy, and the reason I mentioned Obama being in Alaska, he's not talking about developing those natural resources there. He's talking about shutting them down. So we can't use our oil and gas and coal and other resources. If we were to get the regulatory shackles off our business, I think our economy would soar. I think we would see real growth. Businesses are doing just fine. They're terrified about what Washington is doing. And of course, China is another big part of this story as well, because China is not performing at all well. They've had their poorest growth in 20 years, and that's because central planning is too predominant today in Beijing.
We should acknowledge that it's not global warming that's causing a little problem with the audio. We see you very well, and we're able to hear what you have to say. And I want to hear more about the, quote, China connection. Is this a situation where China has the flu and we've caught a cold, to use a health analogy for the health of the markets?
Well, China is not the hub of the world economy. The United States is. And in fact, one of the things about the China meltdown that's happened so far in this year, by the way, their stock market, started out booming this year, and now it's down 30%. So it's down way more than the Dow Jones and the NASDAQ indexes here in the United States. But China is the second largest economy in the world, and we are major trading partners with China. So when their economy slows down, we see problems here in the United States. It means they can buy less of our products.
Well, Stephen, what do you say to people that would say that China is just kind of correcting the problem?
I think the fundamental problem with China is very simple. They still operate with a communist government, for the most part. They still believe in central planning. And what China has done in the last couple of weeks is they've devalued their currency. They've had massive increases in government stimulus spending. They keep trying to spend money on infrastructure projects. And who does that sound like? It sounds like Obamonomics here in the United States. And my point to Beijing is, look, it didn't work in the United States. Why do you want to follow a policy that's failed? But that's exactly where they are. What China needs is to have another round of economic liberalization. They need to privatize their state-owned assets. They need to move towards lower tax rates. They have to deregulate, and they have to get the central planners out of the way of their private industries.
About 45 seconds, Stephen. Got to talk about something literally in your backyard. The Federal Reserve there in Washington. It seemed that we might have seen rates rise at that September meeting. But in the wake of what happened last week on Wall Street, do you think we're going to see any change in interest rates?
That's a tough question. I think probably not. And by the way, JD, I think there's way too much obsession on Wall Street about what the Fed is going to do. Whether they raise interest rates or not, I don't think in the long run is going to make much difference. Well, our problems in this country, JD, are not monetary. They are fiscal, they are tax, they are regulatory, and you can't make up for bad regulatory and bad tax policy by printing more money. Although a lot of people here, and as you said, in my backyard, believe that to be true. You just print money and everything's going to be fine. That didn't work so well for Mexico and Argentina.
Well, I guess translated, Stephen Moore, that means we can't do our yelling at Fed Chief Janet Yellen. Steve Moore, we thank you for your time, and there's more coming up on Newsmax Prime.